Hey there, future billionaires and even future billionaires. Welcome back to EPK Capital's YouTube, the only channel where we crunch numbers so you don't have to, and occasionally, we make them cry. We are here to decode the mysteries of the stock market with more wit than your average spreadsheet. Today, we're strapping in for a deep dive into the digital realm of Tech Mahindra. That's right, the company whose name sounds like it was generated by a random word combiner, but whose stock has been doing anything but random. Is it a tech titan or a digital dud? Let's find out. The company and its promoters. So, who exactly is Tech Mahindra? Well, imagine a giant IT services company that helps other companies transform their businesses digitally. They're like the backstage crew of the digital world, making sure everything runs smoothly, from networking solutions to cybersecurity. And who's pulling the strings behind this digital puppet show? We're talking about the Mahindra Group, a name synonymous with, well, a lot of things. Tractors, SUVs, even electric vehicles. They're a diversified Indian conglomerate with a history longer than your average loading screen. Tech Mahindra is their tech arm, and it's been a significant player in the IT outsourcing game for decades. Think of them as the cool, slightly nerdy cousin in the Mahindra family. 10-year financial analysis. Alright, let's talk Turkey, or in this case, rupees. We're cracking open the books for the last 10 years to see if Tech Mahindra has been showering its investors with profits or just digital dust. Revenue growth. Over the past decade, Tech Mahindra has shown consistent, if not explosive, top-line growth. We're talking about a compound annual growth rate, or CAGR, of around 9–11%. It's not a flashy sports car, but it's a reliable sedan that gets you there. Profit growth. The bottom line has been a bit more of a rollercoaster, but generally positive. They've managed to grow their net profits, though sometimes margins get squeezed by wage hikes and competition. Debt levels. Good news here. The company is virtually debt-free. They have a healthy balance sheet, which means they aren't kept awake at night by scary debt collectors. They're sleeping soundly on a pile of cash. Profitability, margins. Operating margins have typically hovered in the 11–14% range. This tells us how efficiently they run the show. It's a respectable number, but it's a constant battle to keep it from dipping in the hyper-competitive IT world. In short, the financials paint a picture of a stable, mature company that's growing steadily. Not a startup setting the world on fire, but a solid digital landlord collecting rent. Stock chart, technical analysis. Now, for the moment you've all been waiting for, peering into the crystal ball that is the stock chart. Let's get technical, but not too technical. As of today, the stock is trading around 1,400 rupees. Support and resistance. The chart shows a solid support level, an invisible floor, right around the 1,350 rupees mark. This is a price where buyers have shown interest before. On the flip side, there's a stubborn resistance level, a ceiling, up near 1,480 rupees. The stock will need a lot of momentum to push past that point. RSI, Relative Strength Index. Right now, the RSI is hovering around 48. What does that mean? It's not in the overbought danger zone, above 70, or the oversold bargain bin, below 30. It's basically chilling in the neutral zone, telling us the stock isn't overhyped or overly hated at this very moment. It's the Switzerland of indicators. So, the chart tells us the stock is comfortably trading within a defined range. No clear buy or sell signal here, just a lot of wait and see. Benjamin Graham valuation. Time to bring out the big guns, folks. We're consulting the Og of value investing himself, the man, the myth, the legend, Benjamin Graham. We're going to use a simplified version of his famous formula to see if TechM is a bargain. The formula is, intrinsic value equals EPS x, 8.5 plus 2G. It sounds complicated, but it's easier than building IKEA furniture, I promise. EPS is the earnings per share. Tech Mahindra's trailing 12-month EPS is currently 55 rupees. G is the estimated long-term growth rate. We'll use a conservative analyst estimate of about 7%. Now, let's plug in the numbers. Intrinsic value equals 1,237 rupees and 50 paise. With a current price of 1,400 rupees, the Graham formula suggests the stock is, drumroll please, potentially overvalued. The calculated intrinsic value of 1,238 rupees is noticeably below where the stock is trading today. So according to the godfather of value investing, you might be paying a premium at this price. Pros versus cons. AI avatar, every good story has two sides. Let's weigh the pros and cons, the bull case versus the bear case, for Tech Mahindra. The bull case, reasons to be optimistic, OX. Digital transformation boom, companies are still pouring money into AI, cloud, and 5G. Tech Mahindra is right there to catch that cash. Strong parentage, being part of the Mahindra group provides stability. It's like having a really rich and powerful uncle. Global footprint, they have a strong presence across the globe, diversifying their revenue streams. The bear case, reasons to be pessimistic, bear. Intense competition, the IT space is crowded. They're fighting giants like TCS and Infosys for every contract. Valuation concerns, as our Graham analysis just showed, the stock might be trading a bit rich compared to its intrinsic value. Margin pressure, keeping profits healthy is a constant struggle with rising employee costs and pricing pressure from clients. Important checks. Fortunately, Tech Mahindra has a relatively clean corporate governance record. No skeletons in the closet that we know of, which is always a plus. Globally, they are a significant player. While not as large as the absolute top-tier giants, they are a respected name in the global IT services industry, holding their own against international competition. They are a solid contender in the digital major leagues. Conclusion. So, after all that number crunching and chart gazing, what's the final word on Tech Mahindra? We've seen a company with stable financials and a strong industry position. However, the technicals show it's trading in a neutral range, and our value calculation suggests it might be a bit pricey right now. It's a classic case of a good company whose stock price might have gotten a little ahead of itself. Ultimately, the decision to invest, or not to invest, is yours and yours alone. Do your own research, consult with a financial advisor, and never invest more than you can afford to lose. Because in the stock market, just like in a comedy club, sometimes you win big, and sometimes you just get crickets. Disclaimer: this video is for educational and entertainment purposes only and should not be considered financial advice. All numbers used are based on data available as of October 2025 and are subject to change. Investing in the stock market involves risks, and you could lose money. Always do your own due diligence and consult with a qualified financial professional. That's all for today's deep dive. If you enjoyed this witty wander through the world of Tech Mahindra, smash that like button, subscribe for more digital dissections, and hit the notification bell. Until next time, keep those portfolios diversified and your funny bones tickled.